Chainlink appears to have done nothing in the last months. No news, no price development, but maybe that's the opportunity. Let's have a look at the data most people are not considering. Here is the Link price in US dollars. For years, nothing has happened. And the circulating supply of Link tokens isn't changing either. But opportunity is rarely in the obvious setups, and that's why there's this video. Hi, my name is Gerhard. I've been in crypto for the last 8 years. I started this channel 5 years ago, and 3 years ago I hit my first million. I did this through active crypto investing. On average, I outperformed buying and holding Bitcoin by roughly 2% per month. That's how that looks like over time. That's then how that looks like when adding regular contributions to the portfolio. I've also started a copy trading pool that made money last year while Bitcoin lost. Here's the average gain per member that invested in that pool, and here is the pool this year. We are again on track of making roughly 40% APY. And so in this video I want to share again the data that I look at in order to outperform the market. This here, for example, is not a regular Chainlink chart. This is instead Chainlink relative to the altcoin market. So the Link price divided by others. That's the market cap of the altcoins that are not in the top 10. Now, why do we want to look at relative performance? It's because crypto has a lot of correlation. As in, when Bitcoin goes up and Ethereum goes up, many altcoins go up as well. And when they go down, many altcoins go down. So really, to answer the question whether or not it makes sense to buy a particular altcoin is, do we make more money compared to just buying Bitcoin? If we just want to have crypto exposure, we can just buy Bitcoin. But if we want to outperform, we have to look at the relative performance. Now, over the last 4 years, Chainlink did not outperform. It tended to trade in a range versus the rest of the altcoin market. It slightly outperformed with higher lows and higher highs, and we are at the lower end of that trading range with a potential risk of maybe 14%, but a potential reward of maybe 80%, potentially even 110%. Now that's versus the rest of the altcoin market. Unfortunately, the chart versus Bitcoin doesn't look that great. Here is Chainlink versus BTC, and here we've got a quite constant underperformance since the middle of 2020. How fast are we underperforming? Let's take the orange line as a reference. It's roughly 30% per annum. And so that's maybe one of the reasons why the number of staked Link tokens over time isn't growing. There aren't that many people that want to hold Chainlink over the very long term. So this is a staked Chainlink in US dollars. Measured in Ethereum, it's rather constant. So no positive trend here. Here's the total value locked of Chainlink. The all-time high was hit at the beginning of October of last year. Here's the same measured in ETH. The all-time high was hit in February of this year. And so simply measured in US dollars, it seems like the market cap is also trading in a range, with the upper bound being the 20 billion mark and the lower bound being around 3 billion. Currently we are at 6.6 billion. Now this chart shows us the problem of token inflation, as in those tops tend to align relatively well on the market cap chart, but on the price chart we can clearly see how things tend to trend down over time. Again, because at least in the past, the number of circulating Link tokens tended to go up. Chainlink is the largest infrastructure play in crypto, and that then begs the question, how much upside potential is there? Let's have a look at the on-chain metrics. So we've got 870,000 holders on the Ethereum chain, 870,000 wallets that hold at least some Link tokens. Now here's the number of holders across all blockchains. So it seems like there's still positive momentum. How is Chainlink not outperforming when the number of investors is going up? It took 5 years to double the investor base again. Before that, it only took a few months with each doubling. Have a look at the trading volume in the last 24 hours. We had 17 million on the spot market, but on the perpetual futures market, we had much more, 227 million. In other words, the price discovery nowadays does not happen anymore on the spot market on the Ethereum chain. It happens on the bets on the price. And most perpetual futures are actually quite bullish on Chainlink. What we see over here, that's the funding rate of Link. It tends to be positive. In other words, there are more people betting on a rising Chainlink price than on a falling Chainlink price. The open interest, so the amount of bets on Chainlink, are rather low. It's only 400 million. Compare that again to the market cap. That's more than 15 times that. There is positive correlation between the amount of bets on an asset and the price itself. When there's more bets, we tend to also see the price go up. When there's less bets, we tend to see the price go down. When open interest is currently historically low, that's a good sign, because if it was to recover, the price would go up as well. The same is true for trading volume on the perpetual futures, by the way. So when that's very low, the attention on the asset is low, the price tends to be low. When it's high, more eyes are on the token, and so the price tends to rise. The fundamental problem though is Chainlink's long-term underperformance versus Bitcoin. And in the end, we want to beat Bitcoin. Bitcoin is the benchmark. It's the same with stock investments, right? When we buy a particular stock, we want to do better than, say, the S&P 500 or the Nasdaq 100. Otherwise, we could simply just buy the ETF. When we buy an altcoin, we need to do better than Bitcoin. But unfortunately, Chainlink didn't do that long term. And so maybe the only way to play this is to try to find those potential breakouts, where then Chainlink outperforms by potentially more than 100%. But how can we time this? For those kind of trades, I like to look at golden and death crosses. So the crosses of two moving averages. When the faster moving average crosses the longer term moving average, we have a bullish signal. When the faster moving average goes below the longer moving average, we've got a bearish signal. And we can back test. We can simulate buying and selling a token based on the best duration of those moving averages. It's not a straightforward back test. It takes a lot of calculations. So in this case, we made 200 times 200 calculations, 4,000 simulations of buying and selling Chainlink. And the best combinations are over here. So across Chainlink's lifetime, it was the 4-day simple moving average and 22-day simple moving average. So the faster SMA, the longer SMA. The problem is, when we look at the performance over the very long term, this strategy worked until the middle of 2022. And since then, the alpha has dwindled. Since then, it doesn't make sense to just trade based on those crosses, right? When we zoom in over here, we can see the shorter moving average being very close to the price in white and the average in orange. But again, for the last few years, this didn't really work. So let's see what did work. Let's again take this heat map, and this time let's roll this, how the best moving average changed over time. So we can play, we can see what we have chosen, that's this one over here, and then we can check what moving average actually worked best. And we can see that in the early days, our chosen moving average was probably okay, but then later on, it was more this moving average combination here that worked best. And so let's have a look at this. Let's check out this moving average combination. So the 17 and 37 day simple moving average, and then we get this chart. Now, isn't that much more encouraging? A quite constant outperformance also for the last few years. We are taking the 17 and 37 day simple moving average over time. That's then how that looks like. So we backtested Chainlink relative to Bitcoin. We are currently bearish, right? The longer term moving average, the line in turquoise, is above the shorter term moving average. We had our death cross here. It's a bit clearer when we remove the price actually, and we should potentially go long when we have a golden cross. It's not a perfect signal. Every now and then we do get bad signals, but those bad signals don't seem to matter as much when we sometimes get these really big breakouts. So that's one way to trade Chainlink, right? Historically, this worked very well. Now, personally, I'm not waiting for the next golden cross and then buy Chainlink. Personally, I'm rather a fan of following the general trend, and in that case, rather try to find an entry position to short Chainlink, whenever it's expensive though. So again, this is Chainlink relative to Bitcoin, and my preferred way to trade it is simply to wait until we get a next very quick rally. And then when we are at those higher prices, then find a way to get the entry opportunity for a short, to bet on falling prices, because I want to have the macro trend in my favor. How do we time the perfect entry? again, that's what this backtest here is for. We just look at the def cross at that point in time. So we look for a short squeeze, we look for a rally, and then when we get the def cross, we start betting on falling prices and we continue doing that and then make money in maybe not the most intuitive way, but I believe in the way that long term generates the outperformance. Because fundamentally that's the truth. Most altcoins tend to underperform Bitcoin and Ethereum and Solana over the long term because the team tends to cash out, market makers tend to cash out, insiders tend to cash out. And so that's why over the last years most altcoins are in red. There's only a few outliers. And instead of trying to find the few outliers that make money, I just rather bet on the general market structure. And I bet on altcoins doing worse than Bitcoin, Ethereum, and Solana. That's how we, for example, shorted BitTensor on the 6th of April, and we just closed that position. So BitTensor isn't losing as quickly anymore as it used to, but we've got the same approach here. We looked for a rally, we waited until the momentum turns around, until we got the def cross, and then we sell, and that's what we did. And that's how we long-term outperform. That's why our vault, our copy trading pool is making money long-term. That's how I'm able to outperform buying and holding Bitcoin without being a magician, right? I'm just taking advantage of the market structure. If you can just switch this chart from red to green and from green to red, you just flip the colors. It's not that hard to find a winner. And so you can simply just manually copy trade with me, right? Every trade is announced in the premium channels, or you can enter the copy trading. The copy trading though is for the annual subscribers only, but we are planning to get our 40-ish% per annum again, as we did last year. If you got some value out of this video, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. See you next time here on YouTube, or see you on premium. Cheers.